Hello and welcome everybody today to the Daily Market Forecast for Friday, May 26th. This webinar is brought to you by OctaFX, the award-winning Forex broker offering some of the lowest spreads in the industry. We've got a lot of exciting material to cover today, so let's jump right in. First of all, a little bit of housekeeping, some disclaimers, a risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. Secondly, a hypothetical trading disclaimer. The information in this webinar is provided as general market commentary and does not constitute investment advice. What we mean by that is that we're not giving out specific buy and sell recommendations in this webinar. It's more educational by nature. Let's take a look at what we're going to cover today. We're going to look at the top stories among the major currencies, key support and resistance levels, emerging chart patterns, and we're also going to look at some trading strategies. Today we're going to look at a momentum trading strategy on a 5-minute chart. So stay tuned for that. It's not all fundamental analysis and Fed talk. We do look at trading strategies and the nitty-gritty of trading also. First up, the US dollar, the world's reserve currency, the greenback or king dollar as it's sometimes called. We saw yesterday US stock market on fire, the benchmark S&P 500 posting a fresh record close after a record close the day before also. The other big story of the week was the FOMC meeting, minutes from the May meeting, in which they pretty much forecast that rate hike is very likely, signaling that a rate hike is coming soon. Looking at the CME FedWatch tool, the probability of a June rate hike has jumped all the way up to 87%. So we're really have a high expectation of a rate hike in June, and that's so we can kind of expect that that's priced into the dollar. We had the initial jobless claims. That is the first time unemployment claims. It's a figure that comes out weekly, and the claims rose slightly less than expected, which is a positive thing for the economy and a positive thing for the US dollar, and signaling a stronger jobs market. Stay tuned for the US employment report, which comes out the first Friday of every month at 8:30 Eastern time. It's a famous one because within the US employment report is the non-farm payrolls figure, which typically creates a lot of volatility in the market, and it's an important one for traders to know about. And we'll touch on that in future presentations, no doubt. Other big story relating to the dollar was that it rallied against the commodity currencies, that is the Canadian dollar, the Australian dollar, and the New Zealand dollar after the Opec meeting in Vienna. And finally, relating to the US dollar, we have durable goods and preliminary GDP due for release later today, so expect some volatility in the pairs containing the US dollar around the release of those numbers. Next up, we take a look at the euro. It's kind of a quiet day yesterday in the euro, not a lot of economic data coming out. It drifted slightly lower. Wednesday we had ECB President Mario Draghi speaking in Madrid, and during his speech he pretty much maintained his outlook, stuck to his guns with his policy, which is basically to maintain the interest rates low and also continue with his program of quantitative easing, which refers to the printing of money to buy government securities and other securities. So staying on his maintaining his dovish outlook on Wednesday in his speech in Madrid. Looking at the euro, we got resistance overhead at about 113.05. We're going to look at that on the chart later on in the presentation. And finally, I just wanted to touch on the fact that the euro has been boosted by this reduction in political uncertainty after the French election of Macron, and we also see the opposite of that in the States, with a rise in political risk with the emerging scandal surrounding the potential involvement of the Russians in the Trump presidential campaign, which has put pressure on the greenback. Next up, British pound. Cable, or GBP USD, pushed lower by a weaker than expected UK GDP report. Weaker than expected GDP growth, that's gross domestic product. It's one of the most important economic releases, along with the employment reports. So as a consequence of that weak reading, people are starting to fear that they're starting to see the negative consequences of Brexit. And that's pressuring the pound a little bit lower. We didn't see a big move down in the pound yesterday, but putting a lid on it a little bit. We had the tragic terror attack in Manchester earlier this week, and that has put a little bit of pressure on the British pound, though as we mentioned before, the initial reaction was more to sell off dollar yen, so you saw money flowing out of the dollar and into yen, the safe haven currency. So the threat being raised to critical did put a little pressure on the pound yesterday, though, and so cable remains close to this key 130 level. Finally, the big story of the day yesterday was the OPEC meeting in Vienna, and to the surprise of many, crude oil actually fell back below $50 on the news of the OPEC output extension cut. So what happened there? Why did oil fall on the news of the output cut extension? Well, they agreed on Thursday to extend the oil output cuts for 9 months. Investors were actually hoping for more cuts to address the glut in crude oil, which has been going on for about 3 years. So investors had hoped the cartel might reduce output even further to 12 months or even more to help support the price of crude oil and manage this global glut, this global oversupply of crude oil. We saw, of course, the commodity currencies react to this OPEC news, and we saw the Canadian dollar move sharply lower on the news that came out after this meeting. So, without further ado, that's our top stories. Now let's move over to the charts. We got some exciting charts to look at. So I'm just going to get out of here and jump over into the charts. There we go. Right. Starting out with the majors, let's take a look again at the Euro chart, Euro daily chart. It's one we've been looking at for days now. And let's take a look at where we are. We can see price consolidating in this area around 112 and holding below this horizontal resistance to the upside at 113.05 roughly. To the downside, we got this major trend line which it broke through. We saw a really nice follow through to the upside after this trend line break, and we can expect that this trend line may become support. So it was resistance, formerly resistance. Now it can become potential support. Also drew up the 200 period simple moving average on the chart. This is a very important one. This is the one that all the analysts are looking at. Daily time frame is an important one. So the 200 period moving average on the daily time frame is a really important one to watch. And we can see that it kind of came into play here with price bouncing off it a couple of times here. And so we'd expect more support down here. And then finally we got trend line support way down here. And if price comes down here, we might expect to see a bounce here. It looks like we might be forming a little triangle pattern here with these last 4 bars, with price consolidating over the last few days. Very tight range the last couple of days. Next up, let's look at the Canadian dollar, and again we can see what happened with the OPEC meeting. The dollar selling off and the Canadian dollar rallying, but then finally the Canadian dollar selling off along with crude oil as a result of that OPEC news. Let's jump over and look at the West Texas crude, and we can see a long red candlestick here. That's Thursday's candle because we're looking at the daily chart. So we saw a big sell-off in crude as a result of that disappointment in the amount of cutting of outputs that came as a result of the OPEC meeting. Next up, let's jump over to one of the nicest technical charts of the day. It's one of the crosses. That is one of the currency pairs that does not contain the US dollar. So we're looking at euro against the New Zealand dollar. We got a very well defined channel here. Nice trend line to the upside, nice trend line to the downside. Again, I put the 200 period moving average, which looks like it's come into play and provided nice support down here. So in this chart, we're looking for potential breakouts above this trend line, potential bounces if traders are looking to fade the breakout here, and then we're looking for support down here and potential follow through to the downside if price can break through here. 200 period simple moving average, we might expect to see price bounce here, and if it can break through, we'd expect follow through to the downside. But broadly speaking, when you're looking at the daily chart, you got the 200 here, means we're in more bullish territory, so you might be more inclined to take trades, to take buy trades or long trades, whatever you want to call it, because being above this 200 period simple moving average suggests that we're in bull territory. We're in territory where price is more likely to go up than to go down, and conversely, if it moves below here, it suggests that we're in more bearish territory and price is more likely to go down than up. So that's just trying to explain some of the basic psychology behind using these trend lines and moving averages. Let's take a look at gold, the yellow metal. Again, we've got a nice up channel, and I threw up the 50 and the 200 period moving averages here. We have a nice moving average crossover here. When you see moving average crossovers, it suggests a potential trend change, and that was indeed the case here. The 50 crossed below the 200, and we had a really nice down move here, and now we have the moving averages crossing over again with the 50 crossing above the 200. It's called a golden cross. It's what we saw in the British pound, and so we can see a potential upward move off of that. When you see the trend lines move further apart like this, that also suggests that the trend is developing. So if you get into a trade and you see the nice wide out of space between the two trend lines, that's kind of a signal that you're right about the trend change and you should just stay in the trade. When they start coming back together, that's when it suggests that there's going to be another trend change and price is going to move in the opposite direction. British pound, we also saw a golden cross. We discussed that price is holding below the key 130 level, 200 period moving average down here. And I'm going to look at another chart where I've drawn in the Fibonacci levels. Again, I think this 50 level is going to potentially come into play at 132.32. And I would expect to see potential resistance here. We can see that 38% level is providing potential support to the downside at 128.26. And I actually have a third British pound chart, because if you zoom in, we can also see that there is a nice channel that's developed here. So if I threw those all up on one chart, I think it would have been a bit too confusing and would have looked like spaghetti or something like that. So I used a bunch of different charts. I pulled up some shorter term time frame charts for the shorter term traders. Here we got the euro against the New Zealand dollar on the hourly chart. We have a nice little wedge here, and so we can watch for potential breakouts to the upside or the downside here. Because it's an hourly chart, you're more likely to see something like that happen. I pulled up the MACD also. We're going to talk about the MACD later in today's presentation when we look at a sample trading system. The way MACD is represented in MetaTrader 5 is a little different than the typical MACD representation. Here we have a zero line in the middle. The MACD is represented as a histogram in the way it's presented in MetaTrader 5, and here we have what's called the signal line. What you're typically looking for with MACD is crossovers between the MACD line and the signal line, and also crossovers through zero. And that's something that you see across different momentum oscillators. We talked about RSI before, and the center line in RSI is the 50 level, so that's an important indicator on the RSI also. MACD is a momentum oscillator, Don't be scared off by this technical terminology. It just means MACD is an indicator that measures momentum, in other words, the rate of change of price in the market, and it's called an oscillator because it oscillates between a range. Here you can see there's a range here. In the case of RSI, it oscillates between a range of 0 and 100. So anyway, just wanted to pull up a shorter term chart with some trend lines on there drawn up, a little wedge in there. Here's another one that I identified on AutoChartist, which is a plugin for MetaTrader. Australian dollar against the Canadian dollar, so two commodity currencies as we were talking about earlier on. And looks like, yeah, we got a potential for something happening here. We got a nice trend line to the downside. It's been touched 1, 2, 3, 4, 5, many times. And it looks like we might have a potential breakout to the downside here. Again, we're on the hourly chart, so I wouldn't be surprised to see if this happens in the next couple of hours. When you're looking at these trend lines, remember that the more times it's been tested, the more significant the level becomes. So if you have something that's only been touched twice, that's not really a very powerful trend line. You want to see it being tested the more times, the better. Another one I pulled up in AutoChartist, kind of a triangle pattern in the New Zealand dollar against the Japanese dollar. Again, it's a currency cross because it does not contain the US dollar. And so we're looking for potential breakouts here. This is the daily chart, so a slightly longer term time frame. Again, crude oil. We can see the nice down move here off the OPEC news. Nice upper and lower trend lines here. And finally, I'm going to take a look and talk about a trading system. Great, okay. Just enlarge this a little bit. There we go. Okay, apologies for that brief pause there. So this one is called, it's a short-term momentum system. We're looking at, we're using the MACD. We're using a 20-period exponential moving average. Exponential moving average just means that we put more weight on the more recent periods. So don't get frightened off by that terminology. And so what we're looking for is a very basic system when we're looking at a 5-minute chart. So this is a super short-term chart that we're looking at. And so this is a system that could potentially generate a lot of signals over the day. So how does this system work? Buy signal is generated when price moves 10 pips above the 20-period exponential moving average. So here we have the 20-period exponential moving average, and you just need to watch when price moves 10 pips above it for the buy signal. But there's a second requirement. The MACD histogram needs to be crossing or has crossed the zero line. So we're watching the MACD to cross this zero line in order to get the signal. For a sell signal, it's the inverse. So you're looking for price to move 10 pips below the 20-period exponential moving average, and the MACD to be crossing from the upside to the downside, crossing this zero line. So let's take a look here at the instances where MACD is crossing the zero line and where price was potentially where you might have got a signal. So let's take a look. So here we can see price is well above, crossing to the downside here, and so we had a nice down move off of that. So price is a decent amount above the 20-period EMA on the 5-minute chart. It crosses below it, and we did see a center line cross over here, so you potentially had a bearish signal there that you could have taken. So very basic system, but it introduces the reason I'm bringing these up is more to introduce the concepts of the trading systems, the use of the moving averages, the use of the momentum oscillators, and so to give you these concepts and give you something to experiment with. Always recommend testing trading systems in a demo account and proceeding with caution, but you'll see that these concepts in trading systems just come back again and again. So for example, yesterday we looked at a trading system that uses multiple time frames. That's a concept that you'll see again and again in trading systems. Another concept you'll see is the use of the centerline crossover in momentum oscillators. So when you test these out, you can try and apply your own filters and this kind of thing, and it's just a good way to get started. So I think that concludes it, guys, today. I want to thank you all very much for joining us. Look forward to see you in an upcoming presentation, and have an excellent weekend.